Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, September 27th, 2018, and this is the Daily Report for Gold and Silver. Following yesterday's announcement by the Federal Reserve of an interest rate hike, but more importantly, an increased hawkish stance in their demeanor towards their current monetary policy, we have seen the U.S. dollar gain tremendous strength and thereby created substantial headwinds for the precious metals markets. Gold closed down $12.70. It's currently trading at $11.8640. That is a net decline of just over a full percentage point. Silver did not fare as greatly in terms of percentage drawdown, down about 0.9%, a 13-cent decline, and is currently at $14.27. The only market to escape in terms of the precious metals itself was palladium, which continues to get closer and closer to gold pricing and may in fact go into parity with gold prices or overtake it in prices. This move is historic to say the least, up $10.70 today, and that puts palladium at $1,073.80. As we said, a lot of the losses today in the precious metals markets were directly attributable to dollar strength. Dollar strength up 0.87% today at 94.59. And if we take a look at gold pricing, which closed down by 1.06, we can see that only a small portion of today's decline can be attributed to sellers in the market itself. Now, in terms of the equities markets, they were modestly higher, a 0.2% in terms of the net gain. Dow Jones Industrial Average closing at 26,439 after gaining about 55 points. Standard & Poor's about the same, an 8-point gain at 2914. And the composite index fared the best, up about 0.6% at 8,041.97. So traders, although it was delayed by a day, we have now seen the knee-jerk reaction from the policy changes by the Federal Reserve. While it was widely anticipated that the Federal Reserve would announce and implement a rate hike, the third this year, the eighth since they began their quantitative normalization process in 2015, we saw extreme dollar strength, and the majority of that dollar strength can be directly related to weakness in gold and silver today. We had a clear and defined break below our trend line that we created simply by fixing it from a couple of lows that came in prior to that. We have talked about the fact that while we have had a series of lower highs, we have also seen a series of higher lows. That created this compression triangle. We also talked about the fact that the theory behind a compression pattern is that once we do break above or below the trend lines, support and resistance areas, we should see the energy released in forms of a price change. And we certainly saw that today. I am now convinced that we have a very realistic opportunity to see gold go to approximately 1178. That has been our target ever since we put on our short trade. We are short at 1199.40, which up until yesterday had put us under pressure. If you recall, there was even a moment in our trade in which we came within 13 cents of being stopped out. Our stops have been at 12.18.13, 12.18 and 13 cents. We are sending out a trade alert along with today's letter to let you know that we are going to lower our stops. I am now recommending that you trail your stops down to the high achieved today, which was roughly at $1,202. Put your stop at 1202.17. Therefore, my recommendation is to maintain your current short position in gold and to look to trail your stop down. And traders, as we mentioned, it was extreme dollar strength that really put some dynamic pressure on the precious metals markets. We are looking at a daily candlestick chart of the dollar index, and I've just pulled up the Kitco Gold Index, which will really break down dollar strength and selling pressure in the market. We can see that spot gold was down $11.60 today, and $9.10 is directly attributable to dollar strength, with only $2.50 attributed to traders selling gold. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.